How you doing? I'm Big D. Welcome to the show. I hope if anybody is out there and had a chance to watch any of the NFL this weekend, and you had a chance to watch the NFL with Josh Allen and the Buffalo Bills, just won against New England in the New England Stadium. That was an amazing game. Leave a comment in the comment section what you think about that. But we're going to get into a little information about silver. That there's a lot going on. Stick around and do hit comment. Let's talk about this. Let's talk about the NFL if you want to talk about the game or any other game or what happened with Mahomes getting injured. I'm a big NFL fan, so if you want to talk about any of that, especially silver, let me know. Leave it in the comment section. Now, December 12th, 2025, which was Friday, silver closed at $61.92 per ounce. Market shut down for the weekend. But before the close, something extraordinary happened. Silver hit an intraday high of $64.65, an all-time record. The highest price in silver in history. Then it pulled back. Pulled back pretty hard. Down 3% in hours. Profit taking, consolidation, call it what you want. I call it misuse of many different things. Paper silver is top of my list. Now here it is, Sunday, December 14th, 2025. Silver froze Friday, remember, that's $61.92. And what markets reopen Sunday in just a couple of hours, less than a couple of hours from the time of this recording. By the time I have this up, it's probably going to go live. So it's going to be after 6 o'clock, I believe. Now, the question everyone is asking is, does silver break out to a new high above $65? Or does it collapse back down? Because they keep smashing it down using paper silver because there is nothing left. I don't know how they're getting away with this. They should be fined again. And if it's JP Morgan a third time, there should be hell to pay. Now, $65 is the question, the real question. The exact pattern silver has shown every major breakout in history, the pause before the explosion, the consolidation before the vertical move, and right now, we're watching it unfold in real time. I think it's holding. I think it's going to hold. I don't think it's going to come out above 65, but I could be wrong. Do you want to be that person that doesn't have silver in your pocket and this starts to skyrocket? I didn't, and that's why I did something about it. And I started at $18 of purchasing. Now, this is purely educational analysis, pattern recognition based on publicly available market data. Not financial advice at all. Just observing of what's unfolding right now. Let's start with Friday. We're going to back it up again. Made history. Markets open with silver. Shortly after opening, $64.65. Would you have thought that at the beginning of this year? That it would possibly around Christmas time? Could that be your Christmas gift? I think we're going to have huge gifts. I could be wrong. Then the pullback. Now, higher than the inflation adjusted 1980 peak was of $50, which equals roughly $170 in today's dollar with the adjustment of inflation. Higher than any point in 2011, their rally. the highest price ever recorded in silver's trading history for a brief moment. Silver was making history. The sellers appeared, heavy selling, profit taking from traders who'd ridden the rally from the $27 range in September 2024. Now, that's a 140% gain in 15 months. When you're at that much, taking profits at all-time highs makes sense. I mean, it does. The selling accelerated, $64 broken, $63 broken. By early afternoon, Friday, silver was trading below $62. According to multiple market reports, silver fell approximately 3% from its intraday high. It closed the day at, like we talked about, $61.92. Now, most people look at the price action, think the rally is over. Top is in, sellers won. Some are saying time to exit, sell out, say make some money, maybe put it into gold, maybe some crypto. I think not. I think this is not even close to where silver is going to go. But that's not what the data shows. Look at the context. Silver opened Friday up over 100% year to date. It hit an all-time high during the session. Then it pulled back. It was about 4% at the amount of the pullback, but at close it was at 3%. A healthy consolidation after a parabolic move. Look at the volume. According to trading data, volume spiked when silver hit $64.65. Heavy volume at the high. But here's what matters. After the pullback, volume declined significantly. Light selling, minimal panic. The price didn't crash. Bull flag, continuation pattern explained. In consolidation, it's holding in a higher low. In technical analysis, this is called a bull flag or an ascending triangle. Both are continuation patterns that typically resolve to the upside. There are three forces that push silver from $27 to $64.65. And why they're still accelerating even with the market closed. Force number is one. Industrial demand. Record levels. Silver isn't just a monetary metal anymore. It's a critical industrial metal or commodity. When the government put silver in with multiple other metals into critical minerals market. And the sector consuming silver are all expanding rapidly. Solar panels require 15 to 25 grams of silver per panel for the conductive coating, according to the Silver Institute. Industrial silver demands hit a record 680.5 million ounces in 2024. That's an 11% increase for 1 year. Year over year, solar is the biggest driver. Global solar installation doubled compared to 2 years ago. The International Energy Agency projects solar capacity could exceed 500 gigawatts annually by 2030. New solar cell technologies like TOPCon requires 50% more silver than traditional panels. So as the industry upgrades, silver consumption per panel increases. This is a structural demand backed by government policy. China plans to add 160 gigawatts of solar capacity in 2025. I wonder where they're at. Europe targets 700 gigawatts by 2030. India is electrifying its railway network. By 2030, every panel built permanently removes silver from available supply. Now, solar, EVs, AI, silver consumption explosion. Electrical vehicles use 20 to 50 grams of silver per ounce. Traditional cars are about 15 grams. That's double to triple the silver content. EV production is exploding in 2020 from 2023. EV represents 18% of the global car sales. By 2030, International Energy Agency projects that number exceeds 60% in major markets. The global EV market is projected to hit 20 million units in 2025 at an average of 30 grams per vehicle. That's 600 metric tons of silver consumed by the automotive industry alone this year. Data centers and AI infrastructure this year. This is the demand driver. Almost nobody's talking about, which global IT power capacity increases from 0.93% or 0.93 gigawatts in 2000 to nearly 50 gigawatts in 2025. Every data center, every AI service, every computer system requires silver for electrical connections and circuit boards. The Silver Institute projects data centers expansion will add significant silver demand through 2030, and AI adoption accelerates that number. Now, when you add it up, industrial silver demand is projected to exceed 700 million ounces in 2025. That demand must be met. There's no substitute for silver. Nothing. Copper can't do it. Gold can't do it. Copper and aluminum don't match silver's conductivity. This demand doesn't stop because silver pulled back 3% on Friday. Silver panels continue being built. EVs continue being produced. Data centers continue expanding. This is a locked-in structural demand. Force number 2. Supply deficit entering 5th consecutive year. While demand explodes, supply shrinks, according to the Silver Institute. The silver market has been in deficit for 5 consecutive years, starting in 2021. The cumulative deficit from 21 to 24 totals approximately 678 million ounces. That's equivalent to 10 months of global mine production. Just consumed, not replaced. The 2025 deficit is projected at 117 to 149 million ounces, depending on the source. That means demand exceeds supply by that amount every single year. Where does that silver come from? Above ground stockpile vaults, reserves, and those reserves are being drained. The COMEX industry tell the story. COMEX is the commodities exchange in New York where silver futures trade and physical silver is stored. There are 2 categories. Eligible silver, stored but not available for delivery. Registered silver, available for delivery against the futures contracts. Now, according to market reports, registered silver at COMEX has been declining. In May of 2025, approximately 12.5 million ounces were transferred from registered to eligible in a single day. That's 8% of registered inventories reclassified overnight. Registered silver now stands at approximately 156 million ounces, according to the recent data. When future contracts mature and trade, demanding physical delivery, only registered silver can fulfill those contracts if registered inventories decline further. COMEX faces a delivery squeeze, and delivery squeezes drive price vertical. The London Bullion Market Association shows the same pattern. The LBMA silver inventories fell 4.93% in September alone. And look what we're in. We're in December. Now there's decline for 10 consecutive months, according to market observers. Silver is leaving vaults. It is being consumed by industry, vaults by investors, or moved into private storage, and it's not being replaced by new mine production. Why? Because silver mine production has declined approximately 7% since 2016. Most silver comes as a byproduct of copper, zinc, lead, gold even. When base metals are weak, miners don't expand operations. Silver supply doesn't increase. According to reports from major mining companies, capital expenditures plans show zero new projects with significant silver byproduct coming online before 2030. Now, the supply squeeze isn't temporary, it's structural. It's locked in for years. Now, when Trump talks about uh, different things like what they would want to make when he's making deals for tariffs, and he's talking about minerals, precious minerals. Well, this is one of them. There's many others, but there are parts of the world that they have huge mines deposits full of different of these precious metals, and silver is one of those byproducts. Now, force number 3, investing demand surging. Silver ETFs absorbed 95 million ounces in the first half of 2025, according to the industry reports. Global holdings in silver exchange trade products reached 1.13 billion ounces. The ETF inflows are direct measures of institutional and retail investments demand, and they're accelerating. Why inflation remains elevated? The Fed's own projections show PCE inflation finishing 2025 at 2.9%. That's well above the 2% target, with real interest rates near zero. Hard assets like silver become attractive. Silver is perceived as a hedge against currency debasement. Lease rates confirm the squeeze. Silver lease rates hit approximately 30% annualized in October 25, according to market reports. That means people were willing to pay 30% increase just to borrow physical silver. That's not normal at all. That's desperation. That's institutional scrambling for physical metal to fulfill obligations. Rising lease rates and borrowing costs in London points to genuine delivery stress, not speculative positioning. So those are the 3 forces. Industrial demand at records and accelerating. Supply is structural deficit with inventories, and they're draining. Investment demand surges as confidence in fiat currency erodes. The forces pushed silver from $27 to $64.65, and they don't change over a weekend. They're still building. Pressure even with closing markets. Now that held silver back to $61.92 on Friday. Why it could hold $64 barrier, number 1, and technical resistance at $65. Silver hit the $64.65 on Friday. It came within 35 cents of the $65 level, which when it surpasses 65, I think we're going to be seeing some numbers that in trading, like 65, 70, 75, 80, I believe. So let's go from that. Now, these are levels where sell orders cluster, where profit taking accelerates, where monumentum stalls. Silver tested at 65 and failed. It couldn't break through until it breaks convincingly above 65. Traders remain very cautious. I don't know why. I mean, all of this information out there that I'm giving you right now, I don't know why anybody would not believe it's going to go higher. Now, algorithms would recognize the pattern. The move could accelerate quickly towards $70. But Friday, it didn't happen. Silver hit resistance and pulled back. That is kind of normal. Um, is there some shady things going on? It is possible. Technical behavior after a parabolic rally. Barrier number two, Federal Reserve policy uncertainty. Now, this is a critical factor. The Fed met December 10th and 11th, just before Friday's trading. They cut interest rates quarter basis point. The federal funds rate is now at 3.5 to 3.75. That's the third consecutive cut. On the surface, that's bullish for silver. Lower rates means lower opportunity costs of holding non-yielding assets. Lowering rates weaken the dollar. A weaker dollar makes dollar denominated commodities more attractive to foreign buyers. But here's the problem. The Fed's dot plot, which shows where Fed members expect rates to go, indicated only one more cut in 2026. Just one. That's much slower easing than market expectations. Federal Chair Jerome Powell said in the press conference, "We are well positioned to wait and see how the economy evolves." Translation: don't expect aggressive easing. That's more or less what he's saying. Market reaction was mixed. Treasury yields move higher in some maturities. The dollar strengthened slightly. The silver, which had been rallying into the Fed meeting, stalled. Traders are reassessing the path of the interest rates. Now, if the Fed only cuts once in 2026, rates stay elevated longer. The dollar potentially stays stronger longer. That's a headwind for silver. That's why silver consolidated at $61.92 on Friday instead of breaking higher. Technical resistance at 65, combined with the federal policy uncertainty, created a temporary ceiling. But there's the counter argument. The Fed's projected assume inflation continues falling and the labor market remains stable. Both assumptions are questionable. Inflation ticked up in late 2025. The Fed's forecast shows PCE at 2.9%, well above target. Unemployment has been edging higher according to recent data. If inflation stays sticky or if the labor market weakens, the Fed will be forced to cut more aggressively than the dot plot suggested. And that would be massively bullish for silver. So silver closed around the $62 mark, consolidating building energy. The force pushes it higher. Industrial demand, supply deficit, investment flows, they're all still in place. The barrier holds in back technical resistance and Fed uncertainty are temporary. Now I can't wait to see what happens at 6 o'clock Eastern time. The two scenarios and the timeline. Scenario one, breakout to new highs. This is bullish case. Silver opens Sunday evening with a buying pressure. Maybe Asian market drive demands, maybe institutional. Order consumes accumulated over the weekend, hit the market. Silver breaks above $62, then 63. Momentum builds by Monday morning, maybe 65. Technical resistance at 65 shatters. Algorithm triggers buyer orders, buying many orders. Momentum traders pile in. Silver could run to 65, then maybe 70 within days. Now, this is just a scenario. I'm not telling you it's going to do this. Now, the rally is assumed. The consolidation was a pause before the next leg higher. What drives this, though? Several catalysts could trigger the breakout. Economy data releases over the weekend, or maybe Monday, should show inflation running hotter than expected, forcing markets to price in more Fed cuts. Events could drive safe haven buying. A major institution buyer could announce a large silver position, or simply technical monumentum, which could resume as traders recognize that silver's pullback as a buyer's opportunity. Now, if silver breaks the $65 hold, analysts suggest $75 to $90 in by the middle 2026. Some independent analysis mention $100 per ounce if supply conditions tighten further and paper markets face stress. Historical precedent supports this. In 1980, silver hit $50, which adjusted to inflation equals approximately $170 in today's pricing because of inflation. The gold to silver ratio historically averages 15 to 1. Gold is currently around $4,200. It's actually higher than that right now. Silver at $62 represents a ratio of 68 to 1. If reversed to 15 to 1, silver would be $280. Not a prediction, just showing the math range of a possibility scenario for the two. Now, collapse back to support. This is the bearish case. Silver open Sunday and selling pressure, maybe profit taking continues from Friday. Maybe larger holders decide to exit positions. Silver falls below $61. Once $61 breaks, momentum shifts, stops losses, and orders a trigger. Algorithm sell accelerates. Silver falls to $57, then $55. The rally is definitely over. But what causes this? The Fed could signal more hawkish policy that expected its communications over the weekend. Economic data could show the economy stronger than expected, reducing the need for rate cuts. Industrial demand could show signs of slowing, maybe from a recession in China or Europe. Or investment demand could evaporate as traders rotate out of commodities into equities. If this scenario, silver falls from 61 to 50 over the next month, a 18% decline, the bullish case is broken, silver returns to its previous trading range. Which scenario do you think is more likely? Now, based on the data, the bullish scenario has an edge. The structural demand, the drivers are real and locked in. Industrial demand isn't slowing. Solar, EVs, data centers continue consuming silver. Supply deficit is locked in for years. Mine production isn't increasing. Investment demand has strong underlying support with elevated inflation and low real rates. The only major risk is if the Feds turn aggressive, hawkish, but the December DOT plot doesn't suggest that at all. They cut these 3 times in 2025. They're projecting at least one more cut, like we talked about, in 2026. The direction is easing, not tightening. The base case is consolidating, followed by breakout. Silver holds above 65 when markets reopen. If it does, it tests the $65 over the next few weeks. Eventually, it breaks through, and once it does, the move accelerates towards 75, maybe even 90, maybe even 100. We have to see. The timeline is today. 6 p.m. Eastern. Look for the markets to open. When silver opens between $61 and $63, light weekend position. Monday, full trading resumes. Volumes returns. Silver tests Friday's range. Either it reclaims $63 and pushes towards 65 or higher, or it breaks below 61, and we're going to have to see what that is like. I do want to say I very much appreciate you sticking around till the end. And maybe when I get up into the higher numbers and I get monetized and stuff, I can definitely see giving out some prizes in the future, but that's going to be continually in the future. But stay safe out there, and God bless. Have a great rest of your day.